Hi, this is Michael Kramer of Ma Capital. Today is Tuesday, August 19th, and it's around 7 p.m. New York time. We still have a pretty quiet economic calendar the rest of this week here in the U.S. Really, the biggest data points will be coming on Thursday, August 21st, when we get initial and continuing jobless claims, also S&P Global Flash PMIs, and then on Friday, August 22nd, we'll be getting Jay Powell's Jackson Hole address, which is always a big event that the market looks to get some sense of monetary policy going into the end of the year. Outside of that, we haven't really seen very much change in markets since the last time we touched base. In fact, the euro has basically traded sideways over the last week, really unable to push through resistance around 117. Here's our downtrend that's in place. That really hasn't been able to get broken either. So right now we're just kind of in a holding pattern for the euro. I mean, you could make a case that we have formed like we've talked about, a broadening megaphone pattern. And typically when these type of patterns break lower, they're usually bullish indications. And if we were to try to count this out, at least we could probably make a case that this is wave A, B, C, D. We might have one more break lower before we eventually break higher. Obviously, this could be invalidated fairly easily if we were to see the euro just break out above 117. If that were to happen, then obviously we would probably be on a path to 119. That certainly seems plausible, but again, momentum looks fairly weak. And right now it doesn't look like the euro wants to get above resistance. We've also seen the pound give back a little bit over the last couple of trading sessions. We weren't able to get above this 135.80 area. We've just been drifting a little bit lower. Again, this doesn't really seem abnormal. When we just look at the Fibonacci retracement levels, this is only a 23.6% decline retracement so far. In fact, we could go all the way back to 134.20 and still only be at the 38.2 or 133.20 and still be at 61.8. So it's certainly possible that the pound's going to potentially trade a little bit lower. If you want to be bullish, you can see there's also a chance here that we're forming a little bit of a bull flag, and that would be a bullish scenario and setup, which would, again, I mean, at the end of the day, if you break above 135.80, that's going to set up a move to 137. As long as you stay below 135.80, you got to look for further downside. I think it's very simple at this point, without overthinking it. When we look at the yen's also been really not doing very much either. We've seen the yen really sit below this 148.35 level for some time and not really be able to break below 147.03. So we're not really getting any indications out of the yen. In fact, the RSI is just moving completely flat. And sometimes when I get these mixed signals and can't really get a definitive feel for which way these currencies are going to move, I just tend to look at the dollar index. And you can see the dollar index gives you a little bit of a different visual than what you're seeing in some of the other ones. It almost looks like when you look at the dollar index, we have a little bit of what looks like an uptrend that's formed in the dollar index right here. And it looks like there's a little bit of what you could call maybe a breakout forming in the dollar index as well. So it's quite possible that what we're actually seeing in all three currency pairs is not really indecision, but perhaps a little bit of a turn or a change in trend developing that's taking some time to play out. The dollar index, obviously, if we were to, kind of keep grinding higher here, I would look for some resistance around this 99.30 area, maybe all the way up to 100. When we look at gold, we can see it really hasn't been able to mount any sort of rebound. Here's a trend line that formed back in middle of May. You can see that this served as support. When we broke it, it's now been serving as resistance. You can also make a case now that we do have a lower high. We talked about this last week. We still need to really get a lower low with a break below 32.75. That's certainly possible. If the dollar is going to start to strengthen, we could look for that to happen. So for right now, I think we're watching the dollar index for potentially move higher while we're looking for gold potentially to continue to decline towards this 32.75 region with a potential break setting up a move maybe down to 3,200 or even 3,170. Last week we were talking about triangle we were seeing in Tesla with really no clear direction. And this week we did break above it, although at this point we really haven't had any confirmation because we broke above it and we've quickly come back to the trend line. Really, the way this is setting up, it's quite possible that we're going to see Tesla actually break through and come back down underneath the triangle and cut through it before it actually moves lower. The one reason I'm thinking that is notice that the momentum in Tesla has been really negative now for some time. Here's a low, here's a high, here's a lower high, here's a lower high, here's a lower high. So we've been really just trending sideways. We got a bearish divergence with this high being higher than this high, but this RSI being lower than this one. And so really at this point, the momentum factor in Tesla continues to look fairly weak. If for some reason Tesla is able to mount a move higher, then I would look for a move to 365. It needs to basically get above 345 to invalidate this downward path I think we're on. And so right now we're just going to have to wait and see how this ultimately plays out. The DAX has made a little bit of a run here, able to get back towards resistance, but we're not really able to get much beyond it at this point. We're just waiting, like everything else, to see what's going to happen at this 24,500 region. Clearly at this point, we really don't have any clear evidence of a change in trend, although you could make a case that it looks like perhaps there's another one of these megaphone type patterns forming that we've seen form a couple of other times. So, I mean, at this point, if the way I would think about this, right, is you have a downtrend that's formed in the RSI that's really been in place now for a couple of months. And we could probably still see the RSI rise a little bit higher without getting above the trend line. The other piece, obviously, is this uptrend and horizontal resistance at 24,240 is obviously an important level. If this breaks, then we're thinking about moving towards 23,750, while if this somehow breaks out to the upside, then obviously we could be talking about going back towards 25,000 or so. But right now it's looking like that's likely not going to be the case. But again, we'll see how this kind of also plays out over the next week. The FTSE has been trying to get above and beyond this 9190 region. And really hasn't been able to do that yet, although again it looks like a fairly bullish setup for the FTSE. It doesn't look as negative to me as the DAX does, and so I think there's still a chance that the FTSE is going to actually break out here and potentially move a little bit higher. You can see we're already at the upper Bollinger Band, but notice that the RSI is only at 64, so really this could break out to the upside and keep going without really triggering an overbought condition for a couple of days probably. The NASDAQ today put in a big red candle, dropping by about 1.4%. You can see we got down to the 20-day moving average, and that's where we stopped. In fact, when you look at this over the last several months, the 20-day moving average has really been the important level for the NASDAQ. It only has broken below the 20-day moving average one time, and that came on August 1st. At that point, we thought there was going to be a major change in trend, and that failed, and we continued to move higher. Now we're sitting at the 20-day moving average, and unfortunately, we just need to wait and see how this is going to play out. I mean, if we were to get a gap lower like we got here, that to me would be very bearish. Typically when you gap below like a moving average, that's usually an indication that the sellers are really in charge. Although in this case, it clearly did not work. The other thing is that the 10-day exponential moving average has also, we have moved below that today. And you can see it's starting to curl over a little bit. So at this point, we don't really have enough evidence to be super bearish on the NASDAQ yet, but you can clearly see that there is a case to be made that perhaps something is changing in the NASDAQ, and we'll just have to keep an eye out for it. I would say that if we were to see the NASDAQ continue to move lower, I would look for support at 22,750, while I think resistance continues to live somewhere in this 23,900 region. It's really the same thing for the S&P, and the S&P closed just below the 10-day exponential moving average at 64.11 versus a 64.14 on the average. So again, this is very similar. We haven't really seen the S&P close much below the 10-day exponential, and for that matter, we haven't really seen it close at all, with the exception of one time below the 20-day moving average. So again, there's not really much evidence to say, oh, the S&P 500 is giving out here. Right now, we're just in a process of trying to see if this is actually going to lead to anything. You can see here that there's an uptrend that's been in place. That uptrend has obviously been working. Here's the upper end of the channel. So right now, we haven't really broken the 20-day moving average. We haven't broken the channel. There was a short-term channel, a trading range that formed, uptrend that formed here that we broke. And all that would suggest is maybe we move back down to 6,300. If we break 6,300, then that kind of changes things, and we're talking about 6,200. A break of 6,200 means, 6,000. But there's a long way to go here, and it's just as easy that the S&P 500 moves back up to 64.75 and 6,500 as it would be for it to move lower at this point. And finally, the Dow continues to really struggle at this old all-time high. This is the 1, 2 times, 3 times, 4 times, 5 times, about 6 times if you want to count this, 7 times we've been testing this level. The old saying, I guess, is that the more times you test it, the more likely you are to break out. It just seems odd to me that no matter, given the amount of times that we've had to test it, we haven't been able to break out. Clearly, this is because this is a different index, right? It's an average. It's a price-weighted average. It doesn't use market caps. So a stock like NVIDIA just doesn't have the same influence as it does in the S&P and the NASDAQ. And that's, again, really goes to show you the difference between the averages and how they shape up. So if for some reason we're able to get above this old high, then it's a different ball game, sky the limit type of call. But at this point, we haven't been able to, despite a couple of really good opportunities, despite really some bullish moves that we've been seeing. And I guess if you wanted to make a case, you could begin to argue that maybe there's some sort of, reversal pattern setting up here. Here would be your tops, and here's your bottoms. But right now, I just don't have a good view or call on the Dow. It's been a really interesting index to watch. I just got to think that the longer, if it starts moving away from here over the next day or two without being able to break out and hold it, then I think that's a really negative sign and probably an indication we're going to move back down to this 43.9 area. Anyway, have a great rest of your week, and we'll see you next. Bye.